Good evening, all. Welcome to one more session of financial reporting. Yeah. Last lecture, we discussed about the budget. We discussed about the Schedule 3, where we discuss what are the amendments, what are the things which are shown as the presentation, and we have understood the track or update about same. This lecture, we are going to deal with the formats of accounts, and we will talk about Indian Account Standard 1. So let's wait for some more students to join. So let's continue. I'm sharing you the balance sheet of Budget Auto, and we are going to discuss about the structure, the contents of this balance sheet, and then we'll talk about Indian Accounting Standard 1. So let's start with Budget Auto. So this is an actual annual report of 2024-25. This report is having contents. Let me zoom it for you. It talks about the first board of directors, management team, chairman's letter, managing discussion and lifestyle, director reports, corporate governance, general shareholder information, and then after 113 pages, it talks about financials. So total out of 220 pages, the 50% pages are declarations because these declarations are essential part of any balance sheet. This declaration is crucial for understanding the financial upsides, their impact on the wealth creation and overall the business of organization. So in short, the balance sheet is divided to one declaration and acknowledgement, and second about the financials which are related to the balance sheet. So let's just scroll it. I'll zoom it for a reading purpose. So it has given the details of board of directors. It is talking about the updates, who is the actual board of directors, what are their controls, and so forth and so on. So they talk about who are the board of directors. Like we got Nirav Bajaj as chairman, then we have Raju Bajaj as managing director and CEO. We have Sanjay Bajaj and so on. Then they talk about the second line, the management. In management, they are mentioned the Nirav Bajaj as managing director and CEO, Pradeep Srivastava, executive director, Rakesh Sharma, Abram Joseph, S. Ravi Kumar, Dinesh Thapar, and so forth and so on. So the first page is elaboration about who is the director, what are their rights, what are their responsibilities, and what they're doing. They has to mention this declaration so that people will understand who are the members, who are the people who are actually holding this organization. If I just scroll it up on the extreme right hand side, we have the list of compliance officer. The first is a company secretary. Company secretary is a corresponding authority regarding legalities of company. He is working as a personal assistant to an artificial person recognized as organization. Then we have the chartered accountants who are responsible for audit and verification of accounts of the company. The secretarial auditors are the people who just complete the audits about processes and practice followed, like drafting letters, making notes, drafting minutes, understanding records, and so on. Then we have record about costers. The cost auditor are the people who are having the details regarding verification of production cost and everything. Then we have the bankers, like which banks they are dealing with. For example, in case of Bajaj they are given Citibank, Standard Chartered Bank, ICICI, HDFC, Bank of America, DSB, State Bank of India, Central Bank of India, and the Canada Bank. They also mention the stakeholder committee, the nomination remuneration committee, and different committees what the company is holding. So the first page is a declaration of the major key decision holders so that they are clear, they are understood who are the decision makers in the organization, what is their correlation, and what are the symptoms or what are the things they are happening about. So this is the first page. There are around 300 pages. We're not going to cover the 300 pages. We'll just jump on the key information. Let me zoom out again. So he is Neeraj Bajaj, who is chairman of Bajaj Auto. Then we always see this phase, the Raju Bajaj. The Raju Bajaj is actually an MD, but the chairman is Neeraj Bajaj. So if you scroll down, this is the major commanding team, and the details already given above, so we're not interested in that. He is chairman, and it's later about what is the mission, what is the achievement of company, and what company is deciding in future. For example, he says revenue crossed rupees 50,000 crores mark for the first time and in 12% year on year. So he's just declaring how much revenue is changed and why. So the first thing they talk about the growth, they first talk about the structure, they first talk about the management discussion, they share the earnings, they share their achievements, and they talk about the record, the achievements, the benchmark they have set. So initial pages of 119 out of 200 or 300 all pages, the 50 to 60% is achievements and benchmarks. Like they have said that the total operating income is 50,000 crores, earning before interest and tax is 10,000, earning before tax 11,000. So it means they are paying around 1,000 crores something tax. Profit after tax is 8,000. So the tax value or tax proportion is something 3,000 crores they are charging. So their net gain for dividend declaration is something 8,151 crore. So they are having the financial informations like domestic sale, international sale, and so on. So we discuss all things when we discuss in the schedule 3. Now let's go for the something what we interested is declaration. So it's not there. So we'll talk about disclosure. So no disclosures. Let's find out. So no annexes. Then what they do, because sometimes even though the disclosures are not there, I'm just interested to be a core part of my balance sheet. I think there's a technical error. I'll just revise it. Yes, it was a technical error. So let's find out annexure, no annexure. So Indian account standard, they're talking about 2015. And when I zoom it, let's read the statement. The annexed financial statement comply the material aspects with Indian account standard and notified under section 113 of the Act of Companies Rule 2015. So they are abided by the Indian account standard, and as per Indian account standard and disclosure 3, they have to have the disclosures of the balance sheet. Let's see what they mention. There is no change in nature of business during 2025. Here, FY means the financial year, and the first disclosure is okay. I'm sorry, it's not visible, so I'll keep it zoom. So the first disclosure is statement that they has not changed any financial business. They are continuing the same business what they have already. Second, the managing director and whole-time directors are as per the appointment and do not withdraw any commission on or revolution from subsidy. So the second declaration talks about the benefits or the advantage the board of directors or other players they have taken from company's resources. They talk about the company is not accepted any deposits. The company's cash flow statement is attached with the balance sheet. So there is no revision of financial statement or director reports, and details are as per section 134 of the Act. So particularly first declaration is all about we are not changing our business, we are continuing the same, we are following the norms, and all declarations are as per accounting requirements. So let's go to the declaration parts. Most inter I'll just find out the cash flow statement. Yes. So this is an actual statement of cash flow. In this, as we have seen the format in Annexure 3, they have first operating activities in that profit before tax, adjustment to the cash flow. Same like what we do in our theory, the depreciation and amortization expenses, they need to add back. The loss on property or equipment which are scrapped or discarded, it is again added. The provision for doubtful debts, now the provision for tax, doubtful debts, dividends, so forth and so on, is not permitted as expenses. These are merely changing the pockets, and same expenses are added back in company's details. Then, if you concentrate on the further things, the whatever provisions the company has made, the all provisions they need to off. Like for example, share-based payment to the employees. Now, if I'm paying some payment to the employees based on the share price, it is stock option model which is available. Now, this is company's salary, and part of salary can be written off as a provision. So it is added in share profit. Then there is the exchange gain or loss on different items. For example, cash equivalents, trade receivables, imports, borrowings, and loans. So any profit or loss, if it is a loss, it is added. If it is a profit, we need to deduct while preparing the income, which is called operating income. And in the less, whatever the interest received on fixed asset, fixed deposit, loans, or maturity plans, or sale of, so whatever the profits or gain, which is virtual but not in terms of cash, they all are adjusted before doing the cash flow. In the last, we have two more adjustments like government grants, surplus in sale of equipments, and change in assets and liabilities. So they majorly talk about change in inventory. Now, since the change in inventory is negative, they put the change in brackets because the change is appreciable. Whenever you see the change is mentioned and it is negative, then it is always in bracket. Now here there is a confusion in statement because when it is increased, it is negative. Why? Because if I have earlier year 10 and current year my inventory is 20, so 10 minus 20, my answer is going to be minus 10. So when the current year's details are more than the previous year details, then in that case, the balance of change will be na minus. In reverse side, the current year is 1000 and last year, if it is 2000, then the change in provisions, if you can see, it's a positive. So normally the changes in assets should be negative, whereas changes in liability and provision should be positive. If this is in reverse side, then it indicates the wrong rule of appreciation or promotion or revaluation of assets. Then any annuity paid to our welfare scheme or VRS is also adjusted in cash flow because this is based on the payments, not on accrual basis, based on actual payments. So the net cash flow from operating activities is carried on. Then we find the income from investment activities. We have to find the one more heading, that is financing activities. So the cash flow is available out of operations, that is regular business, out of investment, that is my saving, and third, the financial activities where I'm providing the loans or I'm taking the loans for my business. So the same structure we followed in our cash account. So if you remember in advanced financial management, we had deal the format of cash flow and these all were the contents. Let's understand the investment pattern of Bajaj Auto. They got fixed income securities, they got fixed deposits, they got loans, and these are the income source where they are spending on the investment in subsidiary company, sale of investment, purchase of investment, liquid mutual funds, treasury, bank deposits, and they have government shares by ESOPs. So most of the time they are diverted their portfolio. They are not interested in bonds. They are more interested in higher returns. So they talk about the major investments in shares, banks, mutual fund, ESOPs, and so on. But they are ignored the bond market. After the three activities, what I get is net change in cash flow equivalence. Then I have to find out change in asset and other things. And after adjusting all this, what I get is a cash flow. Now, when we're done with this cash flow, normally the balance sheet is over because after balance sheet, I have to display the cash flow. The cash flow is always consist of 2 years. What was happened in previous year and what is happening in current year. So I need to talk about this figure and I need to talk about this figure. Normally, the second figure is highest one and this figure is lowest one. And I'm supposed to get difference as negative. If this difference become positive and it is asset, then these assets are considered as loss making. Whereas in case of liabilities, the first year liability is 10 and second year liability is 20. Then my liability increase is allowable. But normally the increase in liability is an indication of mismanagement. So the cash flow statement is an helping hand to go in detail the flow of money as cash. So if I just open the balance sheet, it is first divided as assets and then it is divided as liability. In your books, when you prepare the final accounts, you first prepare the profit and trading account, then profit and loss account, and then you go for the balance sheet. But in companies, when they prepare the final accounts, they normally first has disclosure about the balance sheet, then they got the disclosure about profit and loss account, and then they have information about cash flow. And after all this information, they have to disclose and discuss what is their management policies. So if I just show you the contents of current assets and fixed assets, so let me zoom it. We'll not see the figures. Now, if you just remember, there is something called note. For everything, there is a note. It can be note number 2, 3, 4, 5, 5A, 5B, 6A. So what are the figures which are shown here? There is an appropriate explanation. There is a meaning. There is application. Why it is so and how it is so. Considering this, we evaluate and understand how the progress is happened or how the progress is normally taken care. So the first they talk about non-current assets. When you talk about the assets, so up to here, out of 300 pages, the 150 pages is all about information, their policies, their formats, and declarations. Now 150 pages is about the auditor reports, the board of director reports, self declarations, and there are various statements quoting that they are progressive, they are doing the achievements, and they are into the growth. So here their financial explanations or self-proud listings will end, and we actually see the balance sheet now. The first is non-current assets. The non-current assets are mostly the fixed and intangible assets. It follows the same format. So For each explanation, there is called note 2. So if I just search note 2, so let me just find out. So it's the last statement. So I'll explain one by one. I'm not getting directly. So the first part is intangible assets. Then we have capital work in progress, investment property, intangible assets under development. Under development is talking about the research activity. Under development is explanation that companies R&D work is progress. Let me show you this interesting part. Intangible assets under development. So this is a gross block. Now intangible asset under development is nothing but the company's now current expenditures for R&D, patents and copyrights. So it was earlier 3.20 and now they have done the addition of 1.79 or and deduction of 2.5. So overall, from April 2025, they achieved the change on 31st March 25 as 224. Now this change can be crores or rupees depend on company's presentation, but they never mention the what kind of research because this is a financial report and total disclosure about type of research or the kind of expenditures is not required in presentation of balance sheet. So here we have note number 2, and for each thing they will have the declaration. For example, intangible assets, they will talk about gross block, they will talk about amortization. Amortization is their final calculation and net block is their final value. For example, in 2025, the net value of something is 2.24. Then they have the second explanation that is intangible assets continued because for any company, how much intangible asset is their choice. So these are something notes which are always provided in accounts. When you do the final accounts in your theoretical part, you do the working notes, you do the calculation of depreciation, you do the calculation of any other things. And these calculations are never being considered as part of balance sheet. For example, in rough, I take a total of credit side and debit side. I decide which side is higher. Based on the higher side, I'll take a call whether I'm making a profit or I'm making a loss. If I'm making a profit, then what are the reasons? If I'm making a loss, then what are the reasons? So these judgmental calls we normally take about the balance sheet, about the assets, depending on our rough calculation. But when we are preparing the balance sheet of a company, these all working notes are part of the financial statement, which we consider as their balance sheet. So when we're talking about the first part, non-current assets, these are long-term investments and purchase. Now, they are mentioned here income tax assets, that is net and non-current assets. So let's just check what is income tax assets. The current income tax assets and liabilities are matured at the amount expected to recover. from the paid to the taxation authorities in accordance with Income Tax 1961 and so on and so. The tax rates and tax laws are used to compute amount those were elected to subsidies under reporting date. Now, in case of any balance sheet, reporting date is the last date where you are recording the transactions. The current income tax relating to the items recognized outside profit and loss, recognized outside profit and loss either in comprehensive or equity. Current items is recognized in correlation to the underlying transaction either directly or equity. So deferred tax and all this. So the current income tax assets are those instruments which we use for our tax saving. If I holding the investment in ALS, if I holding the investment in provident fund, if I holding the investment in scientific experiment, all these are shown as different current assets of tax. So the short-term savings or using the different instruments to evade the tax or to minimize the tax on company is called income tax assets. And for same, I need to have a clear explanation why, how, and where this investment is proposed. My dear friends, in a company, it is not mandatory to directly mention the units or the date or gate. We just need to propose a clear declaration about when and where the amounts are being invested and utilized in what manner for taxations. So let's get back to the other one. After having the assets, we got something called as current liabilities. The current liabilities is an obligation to pay the short-term debts, to pay the duties and honor which we need to take in consideration for understanding of working capital. So the current liabilities are short-term borrowings, short-term financial adjustments for my operational expertise, for my gains, for my uh, advantages, which I'm going to study. It can be changed in creditors, bills payable, or short-term loans, can be mortgage or non-mortgage. So basically, current liabilities are those block which is total assets minus capital block. If I divide, the remaining portion is categorized as the current liability portion. In current liability, we have different short-term borrowings and provisions. After that, we have statement of profit and loss. As I told you, in actual balance sheet, the first is shown the actual balance sheet, and then we show something called as statement of profit and loss. Now, this is not called as a profit and loss account. This is called statement of profit and loss accounts. The difference between statement and account is in accounts we have the all disclosures, but in statement I have just summary what I intend to show or what I intend to disclose. So in statement of account we follow the format of profit and loss account, but instead of individual accounts we write the summary of overall expenses, their headings, and their total amounts. We are not going to mention what actual the expenses are there. So if you just check, they talk about revenue from contracts with the customers, other operating expenses, revenue from operations. So total income is this, and total expenses are there. Then we have something called profit before tax. So when the profit is before tax, then we need to deduct the tax. There are three tax: the current year tax and deferred tax. Like we have got three types of revenue expenditures. One is short term, then short term is for 0 to 3, then revenue expenses that is 1 to 12, and we got deferred revenue that is from 12 months to the 18 months maximum. Similar case, In case of tax, if the tax is paid in advance or middle, then that is considered as deferred tax. If deferred tax has some exceptional items for which there are different provisions, I need to have the disclosure and explanation for same. Then, what are the major current liabilities they are having? The first one is they are talking about the cost of raw material and components purchase. So it's a basically the trading account plus profit and loss account which you follow. They scroll down and understand the statement of profit and loss. So it talks about items that will not be reclassified to the profit and loss accounts. Now, when you're reading the balance sheet of actual company, there are certain new elements you will come across. These new elements are being outside of your book, and you need to be comfortable about understanding C. If I just show you the balance sheet of Bajaj Auto, I'm using a website called Money Control, and I'm showing you the balance sheet. So instead of the actual balance sheet, I'm just showing you the balance sheet of Bajaj Auto. Now, here are the things which you are comfortable. Like I got share capital, I got reserve and surplus, I got the earnings, I got shareholder funds, borrowings, then current liability, then non-current assets. These are the fixed assets. They classified, and in the end, the current assets and total assets. Then there are contingent liabilities, bonus details, and so forth and so on. So when you work out on money control, you always find they are sharing the information as cumulative. These are financial indicators of their profile. The more the blue line, suppose this blue line is here as a second column, then this is a weak section. So if you can see the things are mentioned. For example, if I click this figure, it talks about the changes which is shown in non-current assets of Bajaj Limited. And this is the reason what I suggest we should not follow in a trap of the pie chart when you're doing the analysis of any graph. Because when we're presenting a financial data, we always see the data is shown for understanding ourselves. If I show these all figures in pie chart, I'll never understand the contribution made by the 26, contribution made by 22. Because I need to show the progress, I need to show the workout, I need to show the calculations. So I'm sorry about this. If I click on actuals and if I could click on year on year change, so this is the thing which is called advanced financial presentation. When you are doing an plain MBA analysis in Excel, you have the bar charts. It shows that 22, it is 14, 9, and so your progress is moving. But in advanced finance, instead of showing the changes, we always count on percentage of changes. Those student who has opted for OGT, the title of ratio analysis, they can use these methods, that is year on year change, for understanding the company's financial growth. There are two students for which I given the caramel method. The caramel method is in particular capital adequacy management, which the companies do. Now, what is the capital adequacy management? The capital adequacy management talks about the adequate available capital and its application towards companies' funds and profitability overall. So when I'm dealing with this, I need to have the percentage or I need to have the comparative statement of balance sheet rather than the plain balance sheet figures. So if I just go to third party, then I find debit, debtors, creditors, bills receivable. These things are available. But when I go to the actual balance sheet of a company, what I observe is this. Now, the third is change in fair value as FVTOCI, equity instruments. Now, anybody know the meaning of FVTOCI? The term FOTCI is the future value of derivatives on OTCI. OTCI is over the counter exchange of India, where interbanking people they trade in stocks, options, and these stocks and options are nothing but the derivatives. So even in balance sheet, the format does not require declaration about derivatives. It is social responsibility of that organization to have these all declarations. One genuine question: if I use the fake declarations, my dear students, what are the declarations given in a balance sheet? They are considered as digitally certified. If or even after analysis, the information is found incorrect, the information is found misleading, then under such cases, the equity instrument disclosures are always challenged and they are sued in the court of law. The chartered accounts, if he's involved for this malpractice, his licenses are doubts. He has very hectic fines. If the company secretary is observed to be part of misleading, his license are hold and they get a fines because these commercial authorities like CMAs, CS, and CS, they are bound to be legalities of disclosure of corporate standards. If they manipulate the figures, it's called manipulating the oath of their profession, and the license are hold, and they cannot practice their license as audit or vouch. So this OTCI is a declaration of their derivatives. Then they have other declarations. Now, if I just start understanding each one concept, it will become a different, although case study, because a balance sheet of what we learn and what we see is totally different. So I'm not going that detail for every concept. What I can do is I'll share this balance sheet in your chat box. If permit, and those who are interested, read the balance sheet. You will come to know the various financial terminologies which you can apply or use. Then they have the change in share prices. Now, why the change in share prices is included in the balance sheet? Because this is belong to an declaration about summary of accounts and policies followed. They have mentioned the working note number 31. This working note will talk about what was initial capital, what was the withdrawals, how much dividend is given, how much tax is deducted, and in the last, how much I'm having as a resource. So if you can see, their names are mentioned, and this is considered as digital signatures. Anybody know the meaning of DIN? What is meaning of the DIN which they have mentioned? Anybody? Now, when I say the DIN and there's some numbers attached, for example, there is zero zero, sorry, triple zero and 282. Then the meaning of this code is normally an indication that this is referred as director of identification number. This is part of numbering of all the individuals in the organizations. They are classified as director identification number. So in company, we have a large number of directors, like we have in case of Bajaj. The all directors has their code names. For example, the Neeraj Bajaj has code name as a chairman 28261. The managing director Raju Bajaj has 18262. The Anami Roy, chairman of audit committee, he has this DN. Because when I'm signing any documents, it's not required to put forth my actual signatures. I can sign the balance sheet using digital signatures, and these digital signatures are noted by a German standard part, which is called the director identification numbers. When I have DIN, let's find out whether there is an explanation about DIN. So in find out window, I mentioned this thing. You'll find everywhere the numbers are same and they are mentioned the same. So we require a lot of scroll to get the meaning. So they are not mentioned anything what is DIN. So what they are mentioned is when they have declarations, under that declarations, they have their own numbers. They have the declaration about their appointments, their board of directors, and so on. So when we are talking about the deans, we're actually talking about their number. This German standard of dean is a part of traditional system where there is a rotational directors. Those people who are non-rotational or sleeping partners, in that case, the dean application is not there because their role is limited. But when the person is part of managing directorship or when the dean is part of any other entities, in that case, the decisions about dean is taken elsewhere. So when I have declaration about board of directors, let me just show you. I think my internet is slow. Wait for a minute. Yes. So these are the board of directors. If I count it for you, one, two, this is eight. We got three, three, three. So 9, 17, 18. So there are 20 people as a part of directors. So when we talk about the directors, their signatures. Now this is actual signature of Neeraj Bajaj. So he can sign the documents as he has mentioned here, but it is not mandatory. He can sign the all other reports by using his financial signatures. So if I just scroll down the declaration part in first, there is no certification, nothing. But when I cross something called 145 pages, I'm going in financials, and each financials at the end they are signing digitally. This sign is authorization that they are agree and they are certifying the values mentioned therein is as per their knowledge and their standard values. If anybody has doubt, they can just approach to companies by paying some nominal fees. They can access to companies' accounts and check the financial information available to them. Then, if I just go on extreme right, they are mentioned something called as the SRBPN company, that is, and their registration number. Now, this registration number is a chartered accounts registration number for practice, and below that there is Paul Evans and his registration number. Now, these are the two audit members. They always mention the registration number, their date. They got general secretary, company secretary, and something. So these are the additions I do in balance sheet. Now, let's quickly go on the declaration part because the financial part is already known to everybody. There's nothing great to explain. So, the first thing they have the statement showing changes in capital. What was my opening balance? What is the dividend I paid? What is arrears dividend? And so on. So, these are nothing but working note for the balance sheet. We'll just go with the basic part and we'll avoid the repetition of the contents. So this was the cash flow, which we are just now come across. Yes. So let's understand the declarations. The first declaration is about property of plant and machinery and specific taking which is related to our syllabus. So let me zoom out. Yes. The first thing they mention in fixed assets, the declaration all about the plant and machinery. I'll wait for a few seconds. Please read this declaration. Now, when we talk about this all declaration, please remember they never mention what is the title. They never mention the asset. What they mention is cost of acquisition, the depreciation they are providing, and the valuation properties. Now, if you come across, this is relevant declarations, what we are looking for. You are never seen in any balance sheet that we are mentioned the useful life. Why it is mentioned in actual balance sheet? This is a clear understanding the structural changes and the movements what they have achieved over the tenure about the growth. These structural changes are understanding the company's asset holding, and this is never find in case of your format of balance sheet given in book. So this is something you should remember that when you actually see a balance sheet, you can cross-check their strategy for depreciation. They might tell you the method of depreciation or rate of depreciation, but by using the asset value, by using the life of asset formula, you can cross-check and see what is the life, what is the method of depreciation they have followed. Because this method of depreciation is very crucial in case of the financial evaluations and practice. Now, after depreciation, we got one more important declarations about the, let me show you. Yes. So this was the difference which I was showing. Now, why this so crucial, this declaration? Because in actual practice, you never seen the investment measures is OTCIs. So as per accounting standard 109, the fair value of equity instruments which are trading, if they are classified FVTPL, now anyone know the meaning of FVTPL? The FVTPL is talk about the fair value through profit and loss account. Fair value means the correct value which is denoted. So FVTL is the correct value which is denoted as per the accounting standard 109. So the FVTOCI is an indication or it is considered as fair value through others. So one, we got a value from our profit and loss account, and other, we got a value from other sources. So in balance sheet, we need to compare both the values to understand the profit, the loss, and change in accounting terminologies. So we just covered the some part of the budget auto. We yet to discuss the remaining adjustment and things, but now it's time for the next session. My dear students, your attendance is counted when you're attending the full session. So log in the session, keep your learnings, and don't give option for your attendance. The minimum 75% attendance is mandatory. So all sessions are very important and crucial for every student. Now all of you can log out from this meeting and join the next session of strategic management. After that, we'll come again for the finance session of international finance. Thank you.